I'm Tanya Brown, the mortgage maven and the broker owner of the Blisss Life Agency. I share information from my 2 decades of mortgage, real estate, and finance experience in hope that it will empower you to build wealth for you and your family. This video is to answer the burning question asked in today's environment. Should I buy a home now or wait until after the crisis? Stay tuned for the information you need to answer this question for yourself. Please hit like and subscribe so that I can continue to empower you with the financial knowledge so that you too can live your blissed life. So, should I buy now or wait until after the crisis? This seems to be the million-dollar question right now. Despite an endless amount of doom and gloom, the reality is people are still buying and selling real estate every day. To help you determine if now is the right time for you, I came up with 5 questions you should ask yourself to determine whether you should buy now or wait. So let's get into it. Question number 1, can I afford a mortgage now? Truthfully, this is a question you should ask yourself whether it's a pandemic or not. Are you gainfully employed with verifiable income and you don't foresee any changes affecting your job within the near future? Then maybe you're in luck. You basically need a consistent 2-year work history that is likely to continue. Not necessarily the same job or employer, but the same line of work or field of employment. Basically, if you can afford to continue to pay your rent during the pandemic, then you may be able to afford a mortgage. Find an independent mortgage broker to get pre-approved. A mortgage broker is someone who works with several banks and financial institutions to find the best mortgage loan to meet your individual needs. They can offer you a better chance at approval, a better interest rate, and a faster closing than your local bank. A bank or direct lender only has their own loan programs and guidelines. Therefore, if you don't fit into their box, you'll be told you don't qualify. For example, many of the clients I work with have been turned away by 2 or 3 lenders before they come to me and actually become homeowners. I'll go more in depth as to what lenders are looking for when being pre-approved in my Home Buying 101 video coming soon. Question number 2. Do you have money saved? When buying a home, you will be required to put down a down payment. And don't forget those pesky closing costs. The down payment is typically 3 to 5% of the purchase price, depending on the loan program for which you qualify. The closing costs will run you another 3 to 4% of the purchase price. If you don't have this money already in your bank account, there are other sources that you can tap into to get this money, such as your retirement accounts, also known as your 401k, the cash value of life insurance policies, stocks, bonds, or mutual funds, family gifts, or down payment assistance programs. There are several down payment assistance programs available. They vary by location. I'll do another video to delve further into this topic. What I will say now is, contrary to popular belief, you do not need to be low or moderate income to take advantage of these programs. In California, for example, you can make up to $138,000 in the Inland Empire, $144,700 in Los Angeles County, and $193,800 in Orange County, and still qualify for down payment assistance. During the pandemic, lenders have raised the reserve requirements. Reserves are funds that will be there after you close on your home purchase. The lenders think of them as emergency funds in the event of an income loss that will allow you to continue making your payments. The mortgage broker will go over reserve requirements with you when you get pre-approved. Question number 3, what credit score do I need? The mortgage market has been very volatile during the pandemic. Lenders have tightened their credit guidelines and raised their minimum credit score requirements. Most lenders are now requiring a 640. There are still a few that require just a 600 credit score. If you don't meet the required credit score guidelines, don't worry. The right mortgage broker will provide you with a plan to raise your credit score to the required minimum or provide you with a referral to someone who can assist you. Don't be discouraged. I've had clients who have raised their credit score by as much as 100 points in 1 month by working the credit plans I've provided. In the near future, I will do a series of videos about how to improve your credit. Question number 4. How will showings work? During the pandemic, most agencies have switched to a virtual showing format. You can tour a home virtually via Zoom, FaceTime, or the technology of your choice. Once you decide you're ready to make an offer, a physical showing can be scheduled. Agents and buyers will travel separately in their own vehicles to meet at the property. This is the norm nowadays anyway, even when it's not a pandemic. All parties should wear protective gloves, masks, and use hand sanitizer, wipes, or cleaning products to immediately sanitize anything they touch. Best practice is for the agent to be the only one touching doors or entry or exit areas of the house. Agents will likely wait outside or in the living room as you tour the home to allow for social distancing. As a buyer, plan on bringing your own supply of gloves, masks, and sanitizer, as these supplies are extremely limited and there's no magic stockpile of these items for real estate agents. And question number 5, the big one. Will home prices drop and I get a home for little to nothing like in 2008 and 2009? It's doubtful, and here's why. While it doesn't look like it will be business as usual anytime soon, according to housing economists, home prices aren't expected to fall off a cliff. Low mortgage rates and a housing shortage may help keep home sales moving. There aren't enough existing homes or new construction to satisfy the demand of buyers, many of whom have been looking for a while. Also, today's crisis isn't housing based. There's no dysfunction in the banking system. We don't have many households who are over leveraged with their mortgage payments or in potential trouble like we did in 2008. To the contrary, most homeowners have substantial equity in their properties, so they're much less likely to find themselves underwater on their mortgages. So for now, housing is expected to remain pretty healthy. Sellers will be reluctant to accept less than they would have just a few weeks or months ago. Those not in a hurry to sell may simply pull their homes off the market until the pandemic is over. Now, where economists think we may see some prices come down is in the luxury market. A multi-million-dollar home isn't exactly a necessity, and they typically take longer to sell even during normal times. People who have enough money to buy high-end real estate often have quite a bit of money in the stock market, which has been on a wild ride lately, making those people less likely to want to commit to a pricey property. Now, here's a few extra tidbits. If you are a first-time buyer, now's a great time for you because there's less competition. Simply because some people will wait until after the pandemic is over to get back into the market or enter the market. The spring and summer are the busiest times, and this summer is expected to be extra busy. The summer will be the new spring, and fall will most likely be the new summer, possibly inciting bidding wars for the supply of homes that will be available. If you're already in the market, use this time to negotiate more seller concessions. Less competition means less offers for sellers. Use this chance to negotiate more seller-paid closing costs than might be normal for your area. For instance, I just negotiated $7,000 in closing costs in an area where sellers usually pay about $5,000. Keep in mind the cost of waiting. If interest rates rise, your home buying power will be less. For example, if you qualify today for $450,000 at 3.25% and interest rates go up to 4.25%, you will only qualify for about $380,000 and thus have to buy less home for the same monthly payment. In closing, now is a great time to be spending time with your family, making sure they are healthy and safe. But if you are in a situation where you need to move or find a property, there are opportunities out there. If you can answer questions 1 through 4 with a yes, you might be ready to take advantage of the opportunities available at this time and become a homeowner. I hope this was helpful. If you do have any questions, Please leave them in the comments section below. I would love to hear from you. If you learned anything, give me a thumbs up. Don't forget to subscribe to the Blisss Life YouTube channel so you'll be notified of my new uploads. Thanks, and I'll see you in the next video.